Hi traders, big focus is the Trump-Putin meeting scheduled after markets close, apparently. So any significant Euro-USD reaction might, we most likely happen on Monday with the open, right? Markets will need extra time to process the headlines and any clarifications over the weekend as well. So the key scenarios for the meeting for Euro USD would be, if the meeting is actually short, this is probably going to be bad news. Um, Consider like Trump working out quickly or Putin. That would be a signal of no deal, and it will raise uncertainty. If there is friendly tone, that means there is going to be an optimism around a deal. If Trump and Putin get along, risk appetite will improve, and this could see a move away from safe havens. But for the euro, it's a little bit, of course, more complicated. There's been some recent euro strength that has come from the sort of seller dollar rally and asset buying in euro assets, pretty much. Peace deal might unwind EU defense spending expectations as well. That might weaken the euro. Okay. So if the deal is seen as bad for Ukraine and Europe, but risk appetite improves, the euro could stay supported if investors believe defense spending will continue. This is pretty much the scenario I'm looking at here. A no deal scenario, of course, means that there is going to be tariff threats. This would raise the risk of a trade war, which usually helps the dollar, but in this case could increase the sort of sell America sentiment and support the euro instead, or boost safe havens like the gold. Bottom line is this, guys, that we really need to watch for the headlines and the market tone on Monday. Euro USD direction will depend on risk appetite, EU defense rhetoric, as well as trade tariff fallout from the Trump Putin meeting. The levels to watch for are down to 114. Obviously, we always consider the round levels for euro dollar. They are quite predictable. And on the top, we'll go up to around 118.30. Okay. What is important to take a look here is just to step back a little bit. And I want to show you two important things. One is the ascending channel from the low of September 2022. For a channel, we connect the two lows with the first top, right? The first top. And look where we came actually down and corrected, up and corrected. This level has led to a correction. And this correction is an ABC correction, okay, which implies that we can have multiple scenarios here playing out. One would be another um, zigzag breaking above or not the previous high and continue down in 5 waves. And from there, we would move higher. That would be a flat scenario, expanded or running or just the normal. Another scenario we would get is to continue getting zigzags. That would probably lead to a triangle and then further upside. And another scenario we could get, of course, although there are multiple, not just these, would be a potential move to the downside, and then we will get some sort of descending channel on that, something like this, which would again imply that the longer term would be higher. If we do go higher, I want to bring on a very strong resistance level that comes down the two previous highs of 18 and 2021. That brings us up to around 120. And if you take into account the channel here, we have a confluence, we have a cluster around the 120 level. But to be a little bit more sort of reasonable in terms of time frames and where this could lead, positive um, positive reaction in the euro dollar would probably take us up to the 118.33 first, okay, and then from there we would be looking for a potential leg to anywhere around the 118.78, the 61.80 Fibonacci of that leg to the upside, and then the 120, which is the 78.6. Um, this assumes, of course, the bottom is for now in the shorter term. Let's pay attention a little bit on this particular channel that we see playing out. It could be, I mean, you could consider it as a channel, to be fair. Maybe it makes a little bit more sense to look at this more as a like broadening, widening pattern. Okay, so there will be something like this, which suggests potential upside up to around 117.60. Okay, especially uh, considering this scenario, also an diagonal here, broadening pattern. Okay, so our attention has to be in this territory for now. Okay, so up to the top, we're looking at around 117.50. A breakout from this level would probably get us down to 115.90, 115.18, and 115, and the previous low around the 113 level. Breaking that 113.86 would probably get us down to the 61.8 Fibonacci, and in case that also fails to hold, the next level to take into account would be the 112.33. Pay attention that currently we don't really see um, any signals on the RSI apart from this divergence on the 4 hour that one could consider that has already taken place, is already played out, if that makes sense, because we have come down all the way to a higher low where on the RSI we did the lower low. Okay, so that suggests that this RSI divergence has probably played out, and we would be looking at this as a potential channel going forward.